Hello everyone. Now we're going to analyze the situation with Bitcoin. And take note, I'm wearing an orange t-shirt with a bear and the words Quant Fury on it. This is the platform where I trade. I don't pay any commissions at all, but the color of the t-shirt and the little bear indicate that my current outlook is bearish. That could change. I'm not saying that we will definitely go down, but right here and now I tend to lean toward a decline. Let's take a look at Bitcoin's weekly candles. Take note, 2 weeks ago we had a bearish engulfing candle of exactly this color, and last week, the one that closed just a few hours ago since today is Monday, we also saw a continuation of this movement. In other words, we got a candle with a red, or if you prefer orange body, and a new low. Accordingly, this week, the probability that the trend will continue is much higher, yes. And if it does continue, then at the very least we could go down to the base of this green candle from the week of April 20th, which is around $73,800 or about $74,000. But potentially we could reach the 200-week moving average, which is already around $62,000. Now let's take a look at the monthly candles and see what we have here. Here, pay attention. The May candle is, well, in a somewhat uncertain state at the moment. That is, if in May we are able to engulf the February candle, the red one here, which set the yearly low at $60,000, then there is a high probability that we will see continued growth towards the $87,000 range and potentially even somewhere up here around $110,000. It's possible that Bitcoin will repeat the successes of the stock market. But if we see a drop below the opening point of the May candle, which opened at 76,346, then we will get a red candle indicating that all this growth was just a correction to this huge decline, right? The correction ended with a red candle, and from there we continue moving down not only to 60,000, but potentially even lower towards the 100-month moving average, which is already around $40,000. It's too early to draw conclusions for now, so let's look at the current situation, and for that we'll need daily candles. What do we see on the daily candles? The situation is uncertain. On one hand, Bitcoin broke through the 50-day and 100-day moving averages and stopped its rise at the 200-day moving average. After that, it corrected, dropping below the 50-day moving average, and now it's trading above it again. What's more, it risks engulfing the falling candle from Friday, May 22nd. And if this happens, our next growth target will be the level of $80,300. That's the 200-day moving average and potentially even higher. Let me turn on the markup, and here you'll see that we have potential targets. The ones we discussed in previous reviews, that's $84,250 and $94,270. These are the boundaries of this sideways range we've been stuck in for several months. But first, let's wait for today's daily candle to close. No matter how high it goes, there are still a few hours left until the day closes, which means everything can change. Yes, if we see that we couldn't break through the 77,615 level, yes, that's the Friday opening of this orange candle, and especially if, God forbid or God willing, depending on whether you're short or long, we close below the 50-day moving average and below the $76,322 level, then with a high probability we'll head toward the 100-day moving average and, essentially, the support at $72,078. This level comes from way back in March 2024. That's all clear. It seems that at the moment the situation looks like a long... Look, we're engulfing the Friday candle. We're breaking through the 77,615 level, the opening point of the Friday candle. But everything would be so good if it weren't so bad. Let's open the broadcast that I recorded the previous video about. And in the previous video, you can find a link to it and use these tools while they are still publicly available. And here's this broadcast on my YouTube channel. These are my indicators, and one of the key indicators is the lower red line. Look at the very bottom chart on the left. These are 4-hour candles. Notice there is a red arrow here. The red line has entered the pink zone and has been there for quite a while, which signals strong overbought conditions on the 4-hour chart. Let me expand the screen fully so you can see it better. This means that there is strong overbought pressure on the 4-hour chart, which in turn indicates a risk of a decline. Moreover, these risks are heightened by significant overbought conditions on the 12-hour time frame, as well as by the take signal in the yellow rectangle. It might not be very clear to you, but here it says take with a question mark. It suggests that possibly, not necessarily, but possibly the upward movement has ended, and it makes sense here to consider locking in your long positions if you have any in Bitcoin. In addition, there were 2 growth targets. These are the light turquoise rectangles, which were highlighted with green arrows. We have fulfilled both targets to some extent, and in principle, we have the right to move downward. Specifically, we have downside targets on the hourly time frame. This is the area around $77,000, as well as the $75,800, $76,000 area. These are unrealized missed mathematical downside targets. Again, these are my indicators. You can trust them or you can choose not to. In the end, just see what happens in the next few hours. My expectation is that in the coming hours we will drop at least to the area of $77,000 and potentially much lower. Again, in my opinion, the downside risks are currently higher than the upside risks, if I can put it that way. We're returning to the Quant Fury platform, and I'll just remind you of two things. First, for us, the key is whether the daily close is above $77,615 or below $76,322. Anything in between is just sideways movement. And second, we trade on the Quant Fury platform, at least I trade and analyze charts here, because there are zero commissions, zero fees, spot quotes, and safe trading unless you create risks for yourself by taking oversized positions or not waiting for the right entry points. See you next time. Goodbye. The next review will be today, and it will be about Ethereum.